Hi, this is Michael Rony Mullick, and you are watching the post-market show. Today is the 11th of May, and let us look at how the markets have traded today, what were the important newses of the day, and obviously we will be addressing the elephant in the room, which is the US inflation data, which was announced at around 6 o'clock in the evening. And obviously we will be discussing the important levels for tomorrow, and also tomorrow is an expiry day, as you know, the weekly expiry of Nifty and Bank Nifty. So we shall discuss the important levels as well. So without further ado, let's jump right into the charts and look at Nifty and how it has performed today. So looking at Nifty, you can see it was hugely volatile, and market opened with a slight gap up and touched almost 16,300 levels, which was again a round figure resistance level. And from there was a continuous fall in the Nifty, and at one point of time the selling was so severe it broke the important psychological support area of 16,000 levels as well, although it was for very few minutes. So market had made a low of 15,592, and from there again hopefully towards the end the DIIs came into the market and had placed huge selling or buying orders, and from there market recovered again around 200 points and again ended in 16,202, which is still slightly in the red if you consider close to close basis in Nifty. So as you can see, the market have falling 300 points, recovering 200 points, which makes the life of trader very difficult, and that is the case for the last few weeks and months as well. So this was about Nifty. So Nifty, the major contributors towards the fall of Nifty is definitely the IT sector. So Infosys falling around 1.69%, then TCS falling around 0.78%, and obviously Reliance. And these stocks have a very high weightage in Nifty, so if these are falling, you can expect the Nifty to fall considerably. And the only respite for Nifty was the Bank Nifty, which is still standing strong. From yesterday, it again closed in the green, 0.6% in the green to be precise, and from there the major contributors was definitely the HDFC Bank, and which closed around 0.56% in the green, and Kotak Bank also ending around 0.7% in the green. So that is something good for the market. The banking sector are holding up, and hopefully they continue to do so, and the other stocks should recover from here, because they are almost at a very valuable pricing right now, and a lot of investors are actually investing money, especially after Nifty touching the 16,000 level. So that was about Nifty. And going to the Bank Nifty, we have seen that the markets have fallen following cues from Nifty, but it did not break the important level of 34,000, which it did yesterday. But today, from 34,140 levels, it again recovered towards an ending at the day's high, so which is again a very good sign in Bank Nifty. If you look at the daily charts, it will be telling you again a good thing. So you have seen continuous green candles in the daily chart of Bank Nifty, so which is something good, which means the market is consolidating somewhere around the bottom, and hopefully it can pick up pace in the coming days. So, and another interesting thing to look at Nifty is if you look at the hourly chart, Nifty is actually following a downtrending line. So let me pull up the hourly chart, and yes, so if you can look at this, so it has been following a downtrending channel since 29th April, and Nifty is at around it's about to break this channel. So if this channel is broken, this is a technical it's called a parallel channel in technical analysis. So if this is broken, we can see again an upside in the market. So let's hope the 16,000 was the low for the entire series, and markets pick up from here. But obviously there are important newses which I have told you, that the US inflation data, the much hyped about data, is now out. So let us look to the US inflation data and what it says. So as you can see over here at 6 p.m. the US inflation data was published. It came out to be 8.3%. So over here the consensus, people were expecting 8.1%, to be the inflation, and the March month inflation was at a level of 8.5%. So there are two ways to look at it. One is if you compare the March month with the April month, you can see that the markets, the inflation data was actually lesser than that. So 8.5 and 8.3. So it's 0.2% less than the March month. So that's one way to look at it. And the another way to look at it was people were expecting 8.1, but it came out to be 8.3, which is higher than the expected levels. So the markets have shown a panic towards the opening, and if you look at the charts of Nasdaq, it's very clear it has fallen around 500 points just after the data was released. So let me open up the 5-minute chart. You can see very clearly that the markets have fallen from the levels of 12,500 to again to a level of 12,100, almost 400 fall in the Nasdaq. So again, we are seeing the Nasdaq is towards inching only downwards from there. It tried to recover, but again it is falling down. Same, I think, is the picture with Dow Jones as well. It is also falling after recovering, and also S&P 500 should be same. Yes, it is also very similar to the other two indexes. It is also falling. So it is let's see how the US market ends, because there's a saying that amateurs open the market and professionals close the market. So closing is more important than the opening, because that will be reflected in our markets tomorrow as well. So to get an idea, right now SGX Nifty is again trading at 16,000 levels, which is again was the low of today, as you see in the Nifty. So again, it is again not a good sign. So there is again a few hours for the US markets to close. If we have some buying towards the end, we can expect the markets to reverse from here. Otherwise, again, we can see a major gap down tomorrow. And also being a expiry day, it can make things even worse for traders who are trading tomorrow. So we'll be looking into the open interest data. But before that, obviously, let's discuss the USD INR. USD INR, if I pull up the charts, you see it's around 77.34. So it's appreciated slightly, but again, it is nothing major. So it's still around very weak levels. So it is down from 77.5. It is just around 20 paisa down. That's still it's still higher. The USD INR is still at a very weak level. So we can expect, based on the rupee movement, if it gets stronger, which means USD INR moves towards 76, it would be something positive for the markets. But right now nothing seems to work for the Indian markets, and hopefully things will pick up from here. If you look at the volatility index, I was saying that the markets have been hugely volatile. So the US VIX, after falling for the last few days, again it is almost 1% up today. India VIX is also around 2.24% up, and at one point of time it almost touched the India VIX. If you look at India VIX, it almost let me open up the 5-minute chart. Yes, so you can see it almost touched around 24 levels. So that is something, again it is moving higher and higher, so which is not good for the markets. So yes, coming to the FII DII activities, which we always look at every day. So again, FIIs continue the selling streak for around 3,600 crores selling by the FIIs as usual, and DIIs have come, and maybe they have come when the market has broken 16,000 levels and placed a buy order and making the markets go up to 16,200 levels. So they have bought a total combined buying of 4,181 crores. So this was the FII and DII buying activities. And if you look at again, the important data for India is the Indian inflation data. So as you can see from here, the inflation data will be announced at 5:30 p.m. tomorrow after market hours, which is something good, because if this is announced during the market hours, it makes markets go all over the places. So at 5:30 p.m. we will be getting the Indian inflation data. So if you look at the figures, the last data was around 6.95%. This is for the March month, and for April the forecast is around 7.4%, and people are also expecting close to that the expectation is almost 7.5 percentage. So this is the expectation, and if the data is actually lower than 7.5 percentage, it will make the markets bullish in the short term. It will be something positive for the markets. Otherwise, if it is above that, we can expect further weakening of the market, and Nifty can easily break 16,000 and fall further, and we can expect the market to take support around 15,700, which came around around 8th March, where the market had made a low. So this was about the data for today, what important things happened, and obviously we'll be looking at how the US market ends. As I was saying, that towards the end, if there is some buying, we can expect Nifty to again sustain the 16,000 levels and move up from there. So tomorrow, one more thing we forgot to mention is the OI data, the open interest data, which is again important if you are going to trade tomorrow. So let us look at the levels of Nifty. So in Nifty, the important levels are, we can see huge amounts of call being written 16,200 and above. So 16,200, 300, 400, 500, people have just closed their eyes and sold call options. And on the downside, we can see people are very much risk averse. They have the furthest and the highest put build-up is at 15,500 levels. So especially after the Nifty breaking 16,200, I'm sure people have become more conservative, and on the downside, they have moved to 15,500, and that is where the maximum amount of put build-up is there. So markets can move from 15,500 to 16,200 is the level for tomorrow. And if you look at the PCR, it's 0.5, which means more puts are written than calls, and max pain is also at 16,200 levels, which means that the market is expecting 16,200 as an figure for expiry. Now again, nothing is for sure. Everything depends on the US market today, and we can see huge amounts of OI being shifted, and markets can expire at any level, especially given the volatility that is going on for the last few days. So at this point of time, this is just for your data, so that you can have an idea of the OI buildup and where the markets can go. But again, tomorrow's price action would be very important, and those who are trading expiry days, it's obviously a good idea to maintain hedges and keep very tight stop losses. Otherwise, the markets can be very brutal. It is chopping off traders from both the sides, as we are seeing on a continuous basis. So that's it from my side for this time. So we will be looking at how the US market ends, and hope to see you in the morning pre-market show, where we discuss again the important data and how the US market has closed and what we can expect going into the markets tomorrow, the importance levels to watch out for, and hope to meet you there. Thank you for watching.